Welcome back to Special Focus. I'm still with Kenneth, an analyst with us here at Equity Access. Also joining us to further our discussion is our chief analyst, Mr. Respect Gwenzi. Welcome to the platform.
Thank you, Eben.
Splendid. Getting on to talk about the Zimbabwe National Chamber of Commerce 4th Annual Business Review Conference, where the President of Zimbabwe, President Edi Mnangagwa, was the keynote speaker. Well, do you think it was a positive, the fact that he actually came out to engage captains of industry?
Yeah. It was indeed a positive because in Zimbabwe, we say that we actually need a lot of dialogue for us to be able to resolve a lot of issues that are happening. The president is actually, with all due respect, is actually a politician. So for him to be able to execute his mandates in a holistic manner, he's supposed to engage a lot of people who are actually captains of industry. Okay. No wonder why he did actually appoint some of the ministers that he called technocrats, because he wanted to bring people with experience in the industry also into the government, so that he gets a better understanding of what exactly can we do to get ourselves of this huge mess as Zimbabwe that we're in. So I would take that as a huge positive that he did engage those captains of industry. So I just think I'm just hoping that he's gonna actually work on recommendations that he got from the leaders in business.
Okay, over to you, Respect. Well, the president in his presentation mentioned that Zimbabwe could actually be on a 9.9% growth trajectory, moving towards that 2030 goal. What's the feasibility of that?
So to begin with, I think the president's meeting with the business community, as organized by ZNCC, was a positive gesture. It speaks to his willingness to engage with the key branch of the economy, which is business, because business is it has a bigger role in terms of how goods and services are provided in the economy. So I think it was a very key thing that it did. But also, I think beyond just the gesture, we have to focus more in terms of the gist, in terms of in terms of the content that he shared with them. So we have to focus more on the tone beyond just the gesture to engage. And beyond that, you talked about the 9.9% annual growth, which I think is derived from a 2030 target of reaching an upper middle income economy. An upper middle income economy should have a GDP per capita, which is per person, of at least 3,500. That's the upper end of it. So you realize that from where we are right now, a $24 billion economy, that is the real best GDP. In order for you to grow to that point where you reach 3,500 GDP per capita, it means you have to achieve a certain annual growth rate, and that growth rate is anywhere between 7.5 and somewhere close to 9. So I think that's where he derives this growth rate from. Okay. But now, assuming that we are now left with 11 years, which is 2019 and then 2022, so that's 11 years. So assuming that we've got 11 years to get to 2030, it simply means we have to spread out our growth rate per se. We have to achieve a certain growth rate per year to get to that point, and that growth rate is obviously within that range. But the question here is in terms of how feasible is it for Zim to achieve that growth. So from my personal view and from my calculation around these figures, a growth rate of 9.9%, as what the president said today, cannot be achieved. We cannot achieve that. Some have pointed that we are coming from a low base. So if an economy is coming from a low base, it's very easy to grow. But then once you readjust your GDP, it means you're going up. And your base is becoming higher, and to grow by a quicker rate is now far much more difficult. So in fact, if you now assume that in the TSP we had assumed that in 2019 Zimbabwe will grow by about 8%, and that's now been revised to 3% in 2019. that shows you a ready disparity in terms of where we want to go and where we are.
Okay.
So the reality is a 3% growth in 2019, coming from a 4% growth in 2018, whereas we are already assuming that we will achieve a 9.9% growth. So that gap will keep on widening as we go. And now, given that we are assuming an austerity path where we intend to reduce our expenditure, it means we are going to see a further decline in our GDP. And my own projection will point towards a negative growth in 2019, if not as well in 2018, given the inflation rate. Okay. So I think it's far-fetched to assume such growth rates. But I think if people put in place measures that can solve the current problems, then we might start to see a rebound. But I don't see this happening before 2020. And by that time, we would have been left with only 9 years. And to grow by an average of 9.9%, it means you would have been growing faster than Rwanda, which has grown at an average of 8% per year since early in the 2000s. In China, which did almost 10 years with about 8%. And those are key economies which have got solid bases, and they don't have the kind of crisis that we have. So I think the economics around those projections has to be revisited.
The president was asked a question with regards to the forex issues, the forex retention matters. And in his response, he said that it would be disastrous to allow exporting companies to actually retain their foreign currency. Let's have a listen.
Until the economic fundamentals are satisfactory, we'll then introduce a domestic currency and we'll be able to do what you are saying. But to allow, as we export, people expect to keep their foreign currency, it will be disastrous. Besides,
does he think that it's going to be disastrous for the businesses themselves, or it's going to be disastrous for the government itself? My take is it's going to be disastrous for the government itself, because the government is not really generating any forex. They're actually depending on the forex that they're retaining from these businesses. On the part of the businesses, I'm going to defend these businesses in this sense that, like, we're actually in sort of a half-year reporting season, and we're coming from a lot of AGMs where proper boards are sitting deciding on companies. These are the companies that are talking about the likes of your Bindura Corporation and some other big mining companies that actually mining and earning a lot of forex. These are not just fly-by-night companies who can just get forex and abuse it somehow. They can get forex and they come back and reinvest in Zimbabwe and just help our people. And that same forex, if it is allowed to work in the proper channels, can actually be able to produce something else on top of what they have already. And after that, also some of that forex through transactional means can actually end up in the coffers of the Reserve Bank. It's as simple as that. These are not fly-by-night companies, but these are properly run companies that can actually make sure that they use that forex responsibly. So in other words, the president was actually saying our businesses are not responsible. They can just do whatever they like with the forex that they can earn, which is not true.
Okay. As the conversation progressed, a question was also asked regarding policy as to whether Zimbabwe is a socialist or a capitalist state. And the president said actually that we just do what is best for Zimbabwe. What's your take on that?
I think I would want to respond to the first question. I think you didn't give me a fair chance to also.
Okay, fair enough.
Because, So I think the problem to do with allocation, it's a form of control. When you have got resources that you're allocating, it means you have got control.
Okay.
But if you're pursuing pure market policies, it means you have to let the market do the allocation, and it can do it efficiently, or more efficiently than where you command the economy. So I think this issue to do with disastrous allocation, according to what the president has said, is also a bit misplaced. The reason why there are controls is because there is a monetary base, which is quite huge, and which is also declining in value. And they would want to keep and they would want to keep on maintaining a certain parity of this money, which everyone knows has now gone bad.
Okay.
So by keeping that parity, it constrains this constrained resource, which is the forex that's in circulation.
Okay.
So by saying that it might be disastrous, whereas you would have been the one who created that disaster, I think it's also not fair.
Yeah.
So what the president needs to do is to take care of this other huge monetary base, which is at 10 billion, instead of putting his hands on the 300 million, which has been earned by hardworking people, be it miners, tobacco farmers, and whatnot.
Or which is more like focusing on the tap at the expense of the pipeline.
Yeah, exactly.
Yes. So
Like that.
I think the disaster he is referring to, I mean, it's a disaster in that once he let loose, that means we are going for an exchange rate of 1 to whatever.
Okay.
But at the same time, the problem still remains that you are compressing a variable which ought to be liberalized, which ought to be trading at a certain level.
Okay.
So the choice in Zimbabwe right now is a choice of whether people choose to die slowly or to die once and rebirth just right after.
Yeah.
Interesting analysis.
So I think we have a problem here where there are people who have got their interests, people who are doing big business, local big business, who have benefited from the growth in money supply, treasury bills and whatnot. And these are people with huge balance sheets. So if you're taking a big company, for example, you're taking CBZ, it has got a huge asset base, a huge balance sheet. And that balance sheet is pegged against these same deposits. So once you change from 1:1, it means you have also discounted their balance sheet by a factor which is similar to the rate.
600%.
So they've lost value.
That's the
But
disaster
also
that is
maintaining same
Uh-huh.
is fictitious in a way, because their balance sheet has to be supported by real dollars, because you're saying they're holding real dollars. So we end up having a crisis where you have to sustain the lie. By sustaining the lie, it means you have to rob from miners.
Yeah.
And that's you are distorting the allocation.
Okay.
So I think the disaster has to be, I mean, it has to be quantified, it has to be put in context in terms of what exact disaster you are referring to. For an ordinary person who goes to work on a month-on-month basis and getting what's enough to just get by, what it means is, those people don't have savings. And once you dollarize, they don't have got anything to lose, because they're starting again from zero.
Okay.
So I think it's a matter of people with differing interests in the economy. And the government as well might want to maintain that lie, because they really have got a huge TB holding that they have. And they wouldn't want to pay this in real US dollar, because your debt doesn't, it automatically becomes a debt in USD again.
Yeah.
Okay.
And they would love to play around a bit of RT, GS, around all those voodoo economics kind of stuff. So I think his statement was misplaced. Now moving forward to what you...
Yes, I'll bring back the question. I said that the president received a question as the conversation actually progressed to the effect, is Zimbabwe a socialist country, a capitalist country in terms of policy? And his response was, we just do what we deem fitting for the country, right?
Yeah,
So,
I think it's also a fair response in my view,
okay.
in that all this, Zimbabwe was a socialist economy under RGM. He pursued the policies of China, the policies of North Korea, and so forth. These were all socialist states. But then, as China progressed within its socialist movement, they also started picking up a bit of free market economy policies.
Okay.
That's why they then had to gradually become the fastest growing nation in the world, also leveraging on the base of its populace.
Okay.
So what Zimbabwe needs at the present moment, like what other people have also said, Is it a look? Do we do a look east policy or we do? So this is the exact question that we're asking ourselves.
Okay.
So whichever angle where money comes from, then we are bound to pursue policies that suits capital coming from the east or from the west. So I think that's what he wanted to say when he said we'll just do what's good for Zim, we'll not pursue a socialist economy. Because by virtue of you saying I'm a socialist economy, it means you are foregoing certain market principles, which makes you not so friendly to Western economies.
Okay.
So I think we have to strike a balance.
So it was,
and we also have
well
to know.
tackled.
Yeah. So I think it was a fair response to what was asked of him.
Okay, Kenneth.
From myself, man, I just think the president, as someone who's seated right at the top there, he's supposed to be decisive in his answers. He was just supposed to say, are we working towards pursuing a socialist policy, or are we working towards pursuing a capitalist policy? And then he goes on and gives his own reasons. But for him to say we do what's best for Zimbabweans, you might find that he doesn't really know exactly what's best for Zimbabweans. That speaks to like gross
Subjectivity.
Yes, exactly. That speaks to a president who's not really prepared, as to the way forward. Because at the mess that we're in currently, we need a president who's going to stand up and say, guys, we're going to pursue A, B, C, so that we get to D. He just mentioned the issue of 9.9% growth in GDP. But then for someone to just come in and mention those kinds of numbers, he was also supposed to come and say, we will achieve these numbers pursuing A, B, C, D. Not for him to come and say that we'll actually achieve these numbers, but we'll do that by doing what's best for Zimbabweans. What is really best for Zimbabweans? Because Zimbabweans are speaking different things. Some are saying it's better for us to go back to dollarization. Some are saying, no, we can't at the moment. Some are saying that you better give people who are exporting 100% of their earnings. Some are saying, oh no, it's disastrous, like what the president is saying. So he needs to come back and say, as government, we're pursuing this kind of policy so that we get to this point, and that way he can get the buy-in of his people. But now we don't even know what exactly to buy in if he comes in and says such things that are really vague to my own view.
Well, President Mnangagwa came in with the statement, Zimbabwe is open for business. All right, and he's already taken that initiative, has been with the captains of industry. On the other hand, the Minister of Finance, Professor Mthuli Ncube, has been on a international brand making endeavor, as he was actually with with Richard Quest, talking about Zimbabwe. Do you think government is doing enough to actually brand Zimbabwe differently and give a positive outlook going forward?
Yeah, I think from where we are sitting right now, the real elephant in the room is to sort out our own mess at home. I think it's very, very difficult for somebody to sell a case of an economy which is, how can you ask people to come invest in a burning house without sounding less patriotic? Let me elaborate on this burning house issue. We've got fundamentals that are not right. When investors choose to put their capital in any kind of economy, they look for a return, and that return has to be positive. And you've got a wide range of choices between countries, between regions and whatnot, depending on what return you can get from that investment. So, in other words, your risk-adjusted return has to be positive. So now you are Zimbabwe, and you're trying to go out there, and you're telling people that you're open for business. What exact indicators are investors looking at before they put their money? Number one, they look at issues to do with inflation. If I put my money, is it going to grow faster than the inflation rate? So you need to have a stable inflation. Now we are sitting at 20.85. What does that mean? It means for any investor to generate a meaningful return, they have to get at least something above 20%. And in any normal jurisdiction, to get a return of more than 30% is ridiculous.
Okay.
Stable economies, you get a return 8% to 10% thereabout. If you are seeing an economy that can give you a return of 30%, then something must be wrong fundamentally somewhere. So this is the growth rate. This is the return that an investor would have to achieve in Zimbabwe in order to get a positive return. That's number one. Number two, how swift is my capital? If I put my capital, am I able to withdraw it? So this was also another point which was discussed within this ZNCC discussion, where a diaspora person asked in terms of remittances and so forth. So we don't have the kind of forex to meet foreign obligations as and when they fall due. In terms of dividends, in terms of portfolio disposals, and in terms of even just normal remittances of people who are working here who needs to get their monies outside in real US dollar terms, because that's the money that they invested in Zim. So if you are not able to satisfy a few of those, save for other consideration like policies to do with secure investments and so forth. I mean, there are some investment policies called BIPAs, bilateral, observance of bilateral investment agreements. If you cannot observe those, then you're also not likely to get capital. And that was the case with Zimbabwe during the Mugabe era, where, farms would be invaded. In fact, there's still a bit of that lately. So I think all those combined and policy inconsistencies, which the president was talking about today, saying, no, you guys are getting it wrong. We have been consistent with our policies since I started. Maybe you're talking about the previous era. But all the same, there are those residual issues to do with policy consistencies. So I think a burning house is the exact thing that we are referring to, when it comes to Zim at the present moment. So going on an international drive.
Continue.
So if you're going on an international drive, trying to sell a case and saying and inviting people to a party in a burning house, who is going to come to your party? So I think, to be quite frank, let's sit down as an economy. We need friends. We need to keep updating them that our situation is going to get better. And where necessary, you have to tell them of your hazards, of the hazards that are in your space. And say, but if you can help in this way, I think we can go this way. But don't tell people that we have it all sorted, which is the problem that we have. We have a minister who goes to US and tells people that the ZSC has been the fastest growing. But
it's just
can people be able to take their monies out of their shares when they choose to dispose? They can't. What has been driving that growth? That is the same people who are running away from RTGS and putting their money into safe haven. That's not a stable investment. You see those kind of growth in Venezuela, which is in a deep crisis. So the burning house issue is a serious one.
The house is on fire, as he said. How can we put out this fire, and what can we do to actually rebuild it, going forward?
So actually, you actually did. If you're listening to him,
I did.
You were listening to him. You actually mentioned
I would
that.
like to hear your take as well.
You actually mentioned that our fundamentals are all wrong, and the president and his people are actually supposed to come out and acknowledge that the first step always to resolving a crisis is actually coming out in the open and say, guys, we do have a crisis here. Acknowledge your crisis, and then you actually start working on the way forward to fixing that. Our biggest problem now is our fundamentals are all wrong. You did mention the issue of the stock market that's growing. I think it's around 66 to 68% now on a year-to-date basis, which is all coming from people. Most of them that are running from RTGS balances that they have, and then investing in safe havens, which is driving the price of our stock high. And now, if I can just tell you that the 68% year-to-date upward movement that we have on the stock market, it's actually negative. If you do factor in the old mutual implied rate, or if you just factor in issues like purchasing power parity, just comparing our local prices and the neighboring countries' prices, you actually see that we've actually retained a negative return. On top of that, even if an investor has enjoyed all those returns, he can sell his shares on the stock market, but for him now to repatriate funds to Netherlands or anywhere else outside Zimbabwe, it doesn't work. Even to repatriate your funds to just across the border to Zambia, you can't do that through the systems. So our fundamentals are wrong. So the first way to actually fixing the burning house problem is to acknowledge that our fundamentals are dead, and then start speaking to stakeholders. What exactly can we do to bring ourselves to better fundamentals that are attractive to the business?
Okay. As if to digress, there is a disparity between the 300 million that we have in the central bank vis-a-vis the billions that we have in the RTGS balances. Also with that, we do see that on an annual basis, Zimbabwe receives about $1 billion from the diaspora. You know, do you think that could be a positive contribution in actually getting that fixed? Although it would be a fractional contribution in that regard.
Yeah, I think if I'm to look at that question and also the issue of what is it that's wrong, or the burning house issue, it's important to state what exactly you are saying when you say fundamentals are wrong. So the fundamentals that we have at the present moment, which are not okay, is that of living beyond our means. That has been the order of the day since 2014, after ZANU-PF got the mandate to rule again and got and started ruling on its own in 2014. So we started to see a growing disparity between the national income and as well as the expenditure. So as the gap widened, they felt there was a need to cover that gap. And you find that most of that gap was being caused by what was a result of funding of quasi-fiscal activities and other unknown activities in the economy. So that has been our fundamental problem. But we also have got an issue to do with the trade deficit. Since the GNU time, Tendai Biti's time, there was still that wide gap between our imports and exports. But then the difference between imports and exports, this is the trade gap, is not a very serious problem in the country. Why? Because some countries have got a far much wider gap. Looking at Kenya, for instance, and Ghana, for example, they have a larger trade deficit, but their economies are quite stable. I think if you are to have a wider disparity between imports and exports, to cover for that, you need to have a stable productive base. Because when your trade deficit is huge and negative, what it means is imports will outweigh exports and your demand for forex keep on going high. So what that means is to lower the value of your own currency. And if you are not producing your own stuff, it means you have to pay more to import. As is the case in the present day. So the trade deficit per se is not our problem. Our problem is that we have a trade deficit, but we cannot sustain our own production. Therefore, when there are instabilities this end, we cannot cushion ourselves. We start also feeding back again into that end. So I think our problem, our crisis has been this insatiable desire to keep on consuming what you're not producing. And there's been a lot of talk, I think, of late. Some people are saying government is constructing roads and so forth. But I think we have to be careful when we evaluate these projects. What's funding those activities? Is it real money? Is it thin air money, which is your TB money and so forth? So if it's coming from money that's earned, and you're expending in capital on the capital end, then that's positive. If you are creating money from thin air and you are putting it even into capital expenditure, you have to now understand that the return that you are getting from that end should be far much positive than the cost of you creating money out of thin air. Because a TB is paid for in terms of the interest or the coupon that you pay to a person who gives you actual money. And here, when you create roads, you have to generate a more fairer return than the return that you get here. So in as much as if it's capital expenditure, it has to have a higher positive return. So I think it's a whole lot of economics that's gone bad. That has to be sorted out. But it all comes from a point of truth, accepting that we are in a bad state. We state our problems clearly, and then we start looking at how we solve them. I think the minister has been fair enough in terms of pushing out a bit of information to the public, and also highlighting that in September and October, Zimbabwe achieved a net positive fiscal balance. I mean, that's quite fair enough, but of course, there are excesses to it. When you zoom in on the numbers, you may realize that even companies like Truworth, they mentioned that we received a huge gap in October in terms of our turnover. And you look at tax on that money. Where is that tax going to? It's going to government. So government also benefited from this crisis through increased taxation. Because once sales increase by 187%, it means even your income as government, your VAT also increases. But is that real money? It's not. So I think even from an analyst perspective, somebody has to be careful how they evaluate and interpret when the minister goes out and says we have achieved a certain budget rebalancing. An analyst has to look closer to it. So I think we have problems and we have to address those problems.
Okay. Kenneth, final thoughts?
Okay, my final thoughts are I'm just gonna reiterate this thing. That government needs to come out in the open and acknowledge that actually we do have a crisis in our hands. What can you do to actually fix this crisis? And then one more important thing that Riz did also mention, the issue of them spending on the roads on a return that's not exactly going to be a fair return in terms of what they're spending. So it's a government that's going to keep on taking in costs at the expense of negative returns. So for them to be saying that we're actually on a path to actually achieve austerity.
But do we not need to repair our roads?
Yeah, we do need to repair roads, but at the end, the objective actually is actually to bring out Zimbabwe out of the economic quagmire that we are currently in. You know what I mean? So actually, that's actually supposed to be the number one point, focal point, that they have to get into their office every day and find somewhere where it's written that we need to get Zimbabwe out of this inflation that we have, out of the negative BOP that we have, out of the negative fiscal balance that we have. Those three things always they have to be on his table every morning that walks into his office. I mean the Minister of Finance. That's the way forward.
Well, that's about it for tonight, gentlemen. Thank you for sharing those incredible thoughts. Zimbabwe, thank you so much for being with us. We'll pick it up tomorrow in an interesting conversation again. Please don't forget to subscribe on our YouTube channel.